Hey traders, Richard K from Price Action and Income. I just quickly wanted to shoot a video for you guys to give you a bit of a taster of the market analysis technique that I use. So I'll firstly go through a little bit of an overview of current market conditions, some of the markets I tend to follow, give you a quick explanation of my strategy, which is market geometry, and then show you some recent examples. Or I'm actually going to show you one example, a fantastic example in one of the currency pairs that recently set up. And you'll probably notice on this chart, and this is for the ES on the weekly time frame, it goes past, historically quite a lot of data back here till about October 2002. I quite often like to keep a higher time frame chart with analysis drawn on it, and you'll probably recognize what I've done here is that I've got pitchforks on here. I'll be jumping into what market geometry is in a short while, but in any case, I like to draw these pitchforks in such a way that it contains price action. In this case, it's on the S&P 500 E-mini contract, just to see where the market is in the overall bigger picture according to market geometry. And then together also working with some pattern recognition and some loosely applied Elliott wave analysis. It kind of gives me a really good roadmap as to where I believe the markets currently are, if they're going to be running into support or resistance pretty time soon. So yeah, this is a longer time frame, but I do enjoy drawing these longer time pitchforks as well, just to give me a bigger perspective or a nicer perspective of where markets currently stand. So on the S&P 500 futures here, on the weekly, going back all the way from here, I choose this pivot point, 3 anchor points to draw this pitchfork. And quite often you'll see, although price left the boundaries of this pitchfork, I do something what I call doubling it up, depending on which direction the market is moving, using exactly the same pitchfork and just doubling up. We had this recession period over here, the housing market collapse. You've probably all seen The Big Short, the movie. Well, this was part of some of that move to the downside. And I'm currently viewing this as obviously very clear to see another bullish phase. It's been immensely strong. Even these crazy times that we experienced here from January in 2018 and then last year as well. I mean, look at these moves. It really makes a little blip on the screen according to what happened over here. Very fast moving markets that we had, and then this incredibly strong parabolic move to the upside. Now, I view this, whatever happened here since the January 2018 high, as a what we call an expanding triangle that took multiple years to actually complete. Very fitting pattern that pops up in very volatile markets. The one thing that I do view these patterns, if you consider in the bigger picture, is that especially if they take a long period of time to materialize, any sort of triangle, whether it be symmetrical, ascending, descending, or in this case, an expanding triangle, they tend to appear as one of the last patterns prior to an important high. So this was obviously, in my opinion, a correction, and then price shot upwards. But look at how well price has actually found support and resistance at these lines. It kind of undershot this line over here. These are called median lines, but it also halted price right here in February 2020, and subsequently, obviously, price moved much higher. Now, very interesting, recently, and this was last week, price reached this upper median line, which is called a warning line, and we're reacting lower. So, in my opinion, if you do follow Elliott wave in some sort of way, I think we are moving in a sort of a blow off top, if that is, if it's a term that you probably heard before. Very dangerous type of market, very small corrections in between. I don't actually think that this is the high, but obviously I'm not really trying to forecast the market. I'm just trying to figure out where important support and resistance areas are. and then formulate a strategy according to that. So this is my opinion of the ES. I think very strong resistance that it just hit. We might just make another correction and move high again. And if that happens, I'll double up these lines to the upside again. But in any case, I do think that we due for a deeper correction. So that's my view on the ES, a very strong resistance area that it just hit there. Another market that I'm pretty interested in at the moment is the dollar index, especially if you trade currencies, a very important market to follow of what the dollar is doing. Now I'm not going to go back too long on this one. Again, okay, it's on a weekly. We had this important low in 2008 it was. We made a higher low on April 11th. Just running some fib retracements, very basic analysis. Price, we've previously found support at a 50% retracement of one of these fib retracements, moved up higher, failed to break this high in Jan 2017, and subsequently moved strongly down again. I'm kind of seeing this as a very large corrective pattern. Now you'll see, might look a little bit messy. I've got two different pitchforks using exactly the same anchor point, sloping downwards, one a little bit more horizontal than the other one. But I'm seeing this move to the downside as a symmetrical move that's similar to this one over here. If you project that to that high over here, price has been coming down. I'm thinking that we are still in the process of some sort of corrective pattern here, and once price does reach this sort of area where we have a confluence, which is something I look at quite often between two different pitchfork angles, where they tend to meet, you'll quite often find very strong reversals. Now, whether this would be the end of a much larger correction with upside to follow, I'm still bearish the dollar index, but I do think we're still gonna be correcting for a while longer, probably into the March, June sort of window, April, May, somewhere around there. But in any case, you don't just trade a forecast and blindly get into something. That's why I also developed the exponential profit system strategy, which relies on various conditions that I need to see before I'll get into a trade. So this is what I'm seeing on the dollar index. I think we are correcting, but that's a little bit of a forecast where I'm just thinking prices are gravitating towards. All right, guys, so you've seen all these lines that I've drawn. If you guys are familiar with pitchforks, they are actually a market geometry tool. For those who do not know what a market geometry is basically an analysis technique where traders or analysts use different drawing tools like pitchforks or channels. I use combinations of that with pattern recognition and also fib extensions and retracements, and basically trying to identify the underlying symmetry that's prevalent in all markets, and then trying to use that to your advantage can be greatly beneficial to using it in a strategy. Now, a lot of people might say that market geometry can be very subjective. While I've worked on special techniques that can be repetitively used in a certain way, breaking it down, using longer term time frames all the way down to lower term time frames, and also relying on certain entry conditions to get into trades. But that might sound all confusing, but I think it will be much better to quickly show you what I mean by this. This is on the Australian dollar, US dollar. This could have been on the futures as well, on 6A. We've had this move last year in March where a lot of currencies made very strong reversals. I'm viewed this as the first bullish impulsive move, and then the first proper correction that took multiple months that broke this bullish move. And I think this is the secondary bullish move that we have into the upside at the moment. Now, I've had a pitchfork, a standard pitchfork that I sloped into the direction. Let me just get that setting right. I want to always slope a pitchfork that contains price action properly. If you see that previous one that I've used, price actually left the boundaries of it, which is not going to be very useful if you want to perform these analysis techniques. Let me just give you a quick look there. So I do use the shift pitchfork under certain conditions, but the original pitchfork will mostly be sloped in the direction of a strong trend. Now you'll see immediately that this pitchfork's done really well. There was instances where price didn't reach this upper median line. It pulled back, support, support. It broke above it, pulled back to it, reached this upper red warning line, which in many cases in strong trending markets will quite often halt a strong trending market. Something we see over and over. This also works on smaller time frames, but also, like I mentioned before, like to have these drawing tools on a larger time frame so that I can clearly see where the market's moving to and where support and resistance might step in. Now, very interesting. This was a trade setup that happened over here. Once price reaches upper red warning line, there was this corrective move to the downside, and this is where I would then drill down to a smaller time frame. If I use a daily time frame, I'll drill down to 4 hour. We got guys that work on 4 hours and drill down to 30 minutes, or 30 minutes and 5-minute time frames. It really depends on how much time you have to trade. But if you use a combination of at least 2 different time frames, then quite often this analysis techniques works really well. So once price hit this upper red warning line, we had this longer term correction to the downside. Now, I wouldn't look for any trades, for example, down here. I want to see the market interact with the longer time frame upward sloping line, and I would start doing things like this, expecting a correction. And in these instances, my go-to pitchfork that I use over corrections, I'll use a shift pitchfork, because a very high degree of probability will give you the end of corrections. Now, what's very interesting here is that just using the high of this correction to this lower low and this lower high, you could have entered here where there was a confluence between this downward shorter term pitchfork, in this case my shift pitchfork, my go-to corrective pitchfork, and you could have taken the trade over there. I didn't personally take this trade, but when price eventually broke down from this upper median line, it pulled back to the center median line of this upward sloping pitchfork, and this is where I want to see confluence between 2 different angled pitchforks, and this is where I create what I call geometric power zones. And I'll actually create an area where I'll then be waiting for price to move into, and once it actually interacts with the confluence of these different angled lines, I'll start looking for either reversal candlestick patterns. There's also a new pattern that I'm starting to implement right now. It's not so much a new pattern, but it's something that I see repetitively happening over and over again, maybe a bit more of a conservative type of entry. So guys, just very short, there's obviously more to this. I don't just trade these zones blindly, but I do identify them before time, and they quite often lead to really cool reversals. And I tend to prefer long-term swing trades, and with very minimal risk, trying to get into positions that has great reward probability stacked in your favor. And this is why I use market geometry. It's a very accurate means of analysis. Obviously, if you have some experience with it. Until then, have a fantastic week and all the best. Goodbye.